Right now, it's time to lift the curtain on the economy. Is the U.S. economy as strong as we think it is? Is the government hiding the real inflation story? Here now with their perspectives, Peter Schiff, the president of Euro Pacific Capital. Diane Swank is the chief economist and senior managing director. CNBC senior economics reporter Steve Leisman. We've got Rick, we've got Ron, everybody going through this. Diane, I want to start things off with you. What number are you looking for?
We're looking for 0.1%, which is pretty, marginal increase on consumer spending, but a consumer with still their head above water, not skiing on the top, but their head above water, not going under yet.
What about the PCE deflator?
Again, another 0.1% is going to be more moderate PCE deflator. We've gotten some good news on inflation lately. I think it's transitory, so does the Fed, but as long as it's good news, it keeps them on the sidelines.
Steve, what are the economists overall looking for?
0.5 on income, 0.2 on spending, which would be down quite a bit from the 0.7 gain the prior month. 0.2 would be the core PCE index. That would keep us, I think, right around that 2%, 1.9% year-over-year rate. And I just want to challenge Peter Schiff, if he's going to talk about a conspiracy in the government to keep inflation low. I want numbers. I want names, Schiff. Who's behind this greatest data conspiracy of all time?
I've never called it a conspiracy. It's just very convenient that the people who have the most to gain from a low inflation are the ones that are coming up with the numbers. But I want to talk a little bit about...
Have you ever met these people? You don't even know that.
Yeah, I mean, I know these guys. I don't think they're capable of a conspiracy.
Let me get back to this,
Peter.
to the personal spending.
This is just the most ridiculous thing in the world.
Peter, you go ahead.
Well, let me talk about, one of the major problems with our economy is that Americans have been spending too much money, and we've been borrowing it from abroad to do it. And what we're experiencing right now in the mortgage markets is evidence that we can't afford to pay it back. And as the people who are lending us all this money are losing their shirts, they're starting to rethink the wisdom of what they've been doing. And this credit well is about to run dry.
Hey, Peter, this is Ron Insana. The events that you are describing are inherently deflationary, not inflationary.
No, they're not. No, they're not. I mean, they're going to help bring down real estate prices and stock prices, but if you look at consumer prices, they're going to keep on rising, especially if you consider that Ben Bernanke is likely to try to come to the aid of a collapsing U.S. economy and a collapsing real estate market with still more inflation.
No, he's not. I mean, this whole idea of the statistics, I work hard for the National Association for Business Economics for the quality of government statistics.
So you're part of the conspiracy, Diane.
I'm part of the conspiracy.
You're part of the conspiracy.
Right, there you go. They're not the quality I'd like, but let's face it, the revisions that came out last week, do you even look at those? The benchmark revisions showed upward revisions to inflation historically, upward revisions to income, and upward revisions to the saving rate. I mean, across the board, mixed news from what you're talking about. If these guys had an incentive to do it, then they were doing it in the wrong direction.
I never use the word conspiracy. You guys do that. All I've said is they've changed the way they calculate inflation. That's a fact.
Sure they have.
They don't.
Sure they have.
Right. So that's why.
To better capture inflation. It's still not perfect, but to say that they're doing it in a way to systemically bias in one direction or the other is just ridiculous.
Yeah, guys, time out for 1 second. Time out for 1 second. I want to get Rick in here, and we've got to run for the numbers. Then we'll continue this. But Rick, real quickly. Peter, I want to get you back into this discussion. The markets seem to be liking the numbers so far. We're still looking at triple-digit gains for the Dow. What do you make of these numbers?
Well, it's still early, but, Rick said that no one's talking about the dollar. I talk about it every time I come on this program.
I will give you that. You do.
Very few people listen to me. This PCE number that we just got, that's one of the most disingenuous of the government's inflation numbers because they use substitution. So what they really do is measure the cost of survival, not the cost of living. And then to look at the core is even more ridiculous. But if anyone believes that inflation is only 2.5% annually, when you can see on the ticker there, oil is running at $77.50 a barrel. The dollar is collapsing to record lows. There's no way inflation is only 2.5%.
Peter,
wait a minute.
I won't even argue with you that real inflation is not necessarily what we're seeing in these numbers. However, the Fed takes a look at these things and has a big part of their decision on whether or not what they're going to do with rates comes out of that. Doesn't that have a huge impact? Isn't it something we need to pay attention to?
Right, but it doesn't matter what the Fed thinks. What matters is reality. I don't care if the Fed thinks there's no inflation, or I don't know what they think. I know what they're saying, but I know they have an agenda, and their agenda is to paint a very rosy picture of things because they're afraid of the consequences.
They're actually arguing that
Ron, get it.
Let's assume that everything that Peter said is right, that the numbers are skewed for a particular agenda. Now, that would mean that the bond market is being fooled on a constant basis, and that those independent investors who can judge inflation for themselves without the help of government statistics would, in fact, be buying into some sort of mass delusion about inflation.
Well,
Peter, let me finish the thought for just 1 second. This has become a common refrain for me to say around here lately.
Like to finish one thought.
The notion is that the bond market would be inaccurately pricing in inflation expectations all the time.
Right, let me tell you why that's happening.
Well, hold on, Peter.
Yeah.
That would create an arbitrage opportunity of historic proportions, that whoever figures out the real number will make a fortune, while the people who are being duped keep losing money.
You know, we were short all those BBB minus tranches and made a lot of money. They were being mispriced for a while.
But you're arguing permanently.
No, what's happening is the reason that bonds are so low is because foreign governments, principally in Asia, have been buying all these bonds, and they're doing it for political reasons, not economic reasons. If you want to look at what independent people are doing around the world, they have been shunning U.S. bonds. It's governments who are doing it basically at gunpoint for political reasons. And interest rates are much too low, and they're going to go a lot higher. You know, bond prices are going to collapse, just like real estate prices and just like stock prices.
Actually,
can I turn to Diane real quickly?
Yes, let's get Diane.
Diane, let's talk about the third quarter. We know we got this rebound in the second. It was 3.4. Maybe it's going to be adjusted. A couple ticks either way. So you add that to the 0.7 or 0.6 in the first quarter. You average it out, 2% growth in the first half. Tell me why I should think that the 3 number continues into the third quarter, or is it another 2 kind of quarter for the third quarter, Diane?
I think it's a 2-handle quarter, more a 2 3/4% quarter. So we're talking about an acceleration in growth from the first half of the year, but we're not talking about spectacular growth. There's several reasons for it, not the least of which is that potential growth has slowed, productivity growth has slowed, and the Fed is on alert for inflation. I'm concerned about global inflation, and if you talk to any of these guys, listen to what they say, they're worried about inflation as well. In fact, one of the greatest debates today is whether or not to look at the core or overall inflation, because we do care about oil-based inflation.
I think that's an excellent point, Diane, is that for all Peter said about the Fed, that has been their number one risk, inflation. It's hard to say that Fed has been underpedaling or soft-selling the inflation story.
I mean,
they have not been at all.
Yeah, this repricing of risk, though, is very important, because we found out that a lot of people...
important.
Right, but a lot of people were mispricing the risk in all these mortgage-backed securities and CDOs and subprime debt. And similarly, people are mispricing the risk in U.S. Treasuries. There's a lot more risk out there than people believe.
I agree with you. I agree with you on that, and that's something the Fed has pointed out as well.
On that note of agreement, folks,
we can't disagree
we've got to leave it here. We've got to leave it here. We can't disagree at the end. The last word on that. Sing kumbaya. Here we go with this one.
We actually agree.
Peter, Diane, thank you very much. Also, our thanks to Steve and Rick, and Ron's going to be around for the rest of the show.
Our next segment with Peter should be in a parking garage in Washington, and Hal Holbrook can join us. It's a little bit like...
Or Mr. Beeks passing the inside information in...